Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. The topic today is GME stock, GameStop, AMC, the hedge fund managers, millions of millennials, all going bust, all going boom or bust. Let me technically analyze this information and try to give my explanation as to what is going on in the market last week and today. Let us start off with the GMC. And here you can see and here's the chart. As you can see, this is a 5-day chart. Let's make it like 30 minutes here. So the so-called short squeeze, which was started by the Wall Street bets, the millennials who were out of school, out of jobs, locked down in their apartments, had the laptop, they got together, and the Wall Street bet started talking to each other, and they decided, let's look at some of these stocks which have been shorted like 120, 140% of the outstanding stocks. For example, GME, the GameStop. It's only got like 69 million shares, but 120 to 140% of those stocks are shorted by all these big hedge fund managers. They have been doing this for decades, and they decided, okay, we are going to start buying these stocks. We're going to jack up the prices, and all these people are going to be selling, and as a result, there's going to be more demand, and we can make a lot of money. It makes a lot of sense. And now we have all these individual millennials sitting in their basements or in their study rooms with a little laptop or a computer talking to each other. I'm talking millions of people exchanging information and becoming collectively a group which is here ready to go on war head on with the hedge funds. Well, I think they succeeded. Let's look at it here. This is on January 26th, where the stock ended at, let me go for 10 days here. So, all right, the stock was jacked up to 150, and they were not happy with that. The millennials, they came back, and the stock opened at $350. Then it went all the way to $450, and that's where it stopped. And that is on 28th, and this is on 28th. What happened? The stock went up to 450. Let me explain to you this thing. This is like all the hedge fund managers were nicely sleeping on their bed of millions and billions of dollars from all these short sells were caught off guard. This is like Pearl Harbor. This is like 9/11. They were caught off guard, and this is what happened. The stock just skyrocketed. But then two things happened here. Number one, all those people who wanted to make profit and get out, they started selling their stocks. And there were a lot of technical problems from clearinghouse, from brokerage firms like Robinhood, where they couldn't process these millions of transactions every minute. Look at, for example, here our AMC. Today, that is February 1st, traded 434.6 million shares. Can you imagine? Close to 500 million shares of just AMC today. And there were similar days like that with GME. Anyway, they started selling, and it went all the way to $150. Then it started to go up again. And again, what happened here is it started to come at 400. Now, this hedge fund managers who were in total shock and coma woke up all of a sudden, and they realized, oh my gosh, I'm losing money. And in fact, Melvin Capital lost like $4 or $5 billion. And similarly, another company lost $2.65 billion in losses. So they figured out, okay, we know this game better than you. So we will play the same thing you're doing. And every time the market closes and the stock rises high, like I'm talking like 100%, 200%, they said, okay, we're going to short again. And when they start shorting these stocks, the prices keep going down, and it just comes coming up. The same thing happened here. Like today, if you look at like after hours trades, and let's just go to like 5 days here, and this is what happened. This was Friday, and then this was Friday when it ended in the market. Then it went up all the way up to $375, and look where it closed, at $189, $200 drop. So the hedge fund managers woke up. They said, we have been in this game for a long time. We follow technical guidelines here like the stochastics or Bollinger Bands, and they have 100 other technical indicators to show where the momentum is going, shifting, and what to expect next. So they come here and short every morning when the price is high, and then it keeps going down and down, and this is what has happened here. There are a lot of millennials who say, I'm going to hold this till it goes to $1,000. Okay, if you're somebody who bought it at $375, today you're worth this half of what you had. So I just want to caution, I trade actively. I trade QQQ, which is NASDAQ index. I just not only trade QQQ, I tried triple QQQ. That is 3 times the value of triple Q, which is T like Tom, QQQ. I trade that by cover it with calls. So every time I buy a TQQQ, I sell calls. So my downward damage may be like 20-30% instead of 100%. So I always buy, because I'm not interested in making mega profits like today, where the triple Q, let me pull this one down here for a second, triple Q jumped $6.65. But I'm more interested in just little few pennies here and there, which is safe. It's like using a protection, a safety net, so that if the stock drops $6, I am not losing $6. I probably lose like $4, which is far better than. Plus, the time is burnt. Actually, the triple TQQQ options have a very high premium, and for 4 days they have like $3 to $3.50. I mean, you're talking like 70 cents each day premium for buying these options. Anyway, that's a totally different story. Let's get back to GME. Look at what has happened to GME. It started off at $375. This is before market opened, and it opened around, here's where the market opened. The day's range was 212 to 322, and after market close, it dropped further to like 189 change. That's $190. That's like $35 below where it closed. Let's look at AMC. And here's AMC. Let's look at these numbers here. AMC started off at 1725 before market opened, and then it just went around little swings, and then this is where the market opened. That is today, February 1st, and it just from there it was downhill. And after the market close, it dropped further from 1330 to 1244. I don't want to get into the technical details, and this is the slow stochastics, this is the Bollinger Band, and as I said, the hedge fund managers have a lot more information, and you can get it with like 10 minutes, 15 minutes, 30 minutes, whatever time frame you want, to see if this has reached the bottom like here or not. And the same story happened here, and that is when the prices go extremely high, the hedge fund managers are smart, I tell you. They're going to short the stock at $24. But let me tell you the difference between the hedge fund manager with a $5 billion portfolio versus you having an account, or me having an account with Robinhood with maybe $50,000 or $100,000. we already know we can only buy 20 shares or maybe 100 shares. So they already put a brake on our ability to buy. Number two, if you're buying this on margin and if the stock goes against you, your capital is eroded in a matter of minutes or hours. But I don't want to sound negative, but I just trying to give you the reality. As I said, when GME hit, this was like Pearl Harbor. It came unexpectedly. The shorts who were all deep sleeping in coma because they were so engulfed with their profits, they were caught off guard. Now they have woken up and they are back to work. And they can short, every time the stock goes up, they can short because they can force the market prices to come down. As a result, they can short at $24 and then easily get off at like $14, $12. And the beauty is, all these big boys, the Wall Street big boys, I'm not in favor of big boys because I'm a small guy like you and all the other 7 million millennials who are on this forum, but they can buy 1 million shares. If they buy 1 million shares at $24 and turn around and sell it for buy it for $14, they made $10 million in a matter of a couple of hours. The point I'm trying to make is this is highly volatile game. Some of us may be lucky, we got in here and it was just zoom going like a rocket. We made some profit and maybe take some profit off and just go and have a nice drink and enjoy the evening with your family or friend. In the long run, once the hedge fund managers figure out where the damage is, they will try to find a plug and they will go and play along with you. As a result, if we are not cognizant of how violent these markets can be, we can get hurt. I mean, that's just my analysis. And this is clearly proven by today. Let's just go to like 2 days scale here so we can see. Here, before the market opened, AMC was as high as $17.25. And in the early pre-market hours, it came down and went up again. And as soon as the market opened, I guess all those hedge fund managers who shorted the stocks here started buying them back. As I said, yes, they have a major damage. They lost like 75% of their assets, but they can always come back because they have reserves. As I said, if they bought 10 million shares here, 434 million shares were not just traded by traders, because even if you have a margin, you just cannot trade. First of all, you are restricted as to how many stocks you can buy and sell. And every time you buy the stock, you are paying margin interest. And there is only so many times you can do it because some of the sales which go against you is going to keep reducing your capital, and it is also going to reduce your margin buying power. That's why Robinhood increased the margin requirements so high and restricted the stocks so much. All these big numbers you're seeing could be, we've got 7 million millennials who are in this forum, who all, if they buy, still it is like 100 trades for each millennial. Think about it. These are guns which are done by professionals, and we have to think carefully as what is our mission. Do you want to make $1,000? You want to make $2,000? Or you want to say, okay, here is my $14,000. I'll forget it. I'm not going to even look at it. I will see it next month. I'm just going to turn off my computer, take a vacation. And okay, fine, you can do that. But if you had bought the stock at $17, today your stock is worth $12,440. I hope I have brought some insight into what is going on with these stocks technically, and also what is driving these prices from the hedge fund managers' point of view and from the millennials' point of view. I think, like any war, it cannot last forever. Eventually, the dust will settle down. Main thing is make sure you have enough assets to trade another day. Thank you so much for watching, and please do subscribe to our channel.